I do understand that there are many problems to do with emerging markets, namely, sometimes it's a political pressure, sometimes it's economic problems, sometimes, it's lack of infrastructure or sophistication of entrepreneurs when it comes to international expansion. But still, there are many innovative ideas, talented founders, which, if given the right support and sometimes the right push, they can make it internationally.
Welcome to the Startup Huddle. I'm your host, Josef Maruvchak, and I'm excited to introduce you to the current and upcoming leaders of the startup tech world. We'll discuss digital products and key takeaways for life and professional growth. So grab a coffee and let's huddle up. Hey everyone, today we are here with Alex Piskunov from a very interesting background. So Alex currently is a managing partner of KAAN Ventures. He also was a managing partner in a different VC some time ago, spending a lot of time in emerging markets and traveling all around the world. So he knows almost everything about startups and also about startups investing. And I hope that we'll have a great discussion today. Thanks very much for joining us, Alex.
Pleasure to be here.
Alex, can you tell us first a little bit more about your background so that the listeners understand where you're coming from and what you do right now?
Well, sure. So myself, actually, I'm coming from an emerging market. I'm originally from Russia, but I spent most of my life living, studying, and then later working in the West. I went to school and university in the UK, worked there in investment banking and private equity for a few years, left to start up my own company, which was not technological in its nature. It dealt with imports of wines from exotic destinations to bars, restaurants, and hotels back in the UK, and scaled that company for a few years until Britain decided to leave the EU, which for business back then it was quite problematic. But looking back, I would say that COVID was a much bigger detractor to the performance of the beverages and the restaurant industry than Brexit. So I still managed to sell my business very, very successfully for the time, took that money and moved back to the investment sphere. But before that, I used to, work in tech M&A, work in investments in real estate, industrials, manufacturing, late stage tech. And when I left my startup, I wanted to try something new. So I started to work at an investment fund in San Francisco in the States, which dealt with investments in the field of deep tech, which includes such areas as, for example, robotics or quantum computing or space tech or new materials in the early stages of the development cycle. So, for example, at seed stage and Series A. And I was working at that firm for 3 years in total, eventually became one of the partners. And when COVID struck, I decided that, suddenly San Francisco is not such a wonderful place anymore, even though, it does have its many advantages. And once again, I decided to try something new, moved over to Asia and started up another company, another fund, which now deals with mainly investments in the later stages. So right now we focus also on deep tech, like I used to previously, but uh, now it's Series B plus. So it's already working with developed companies, helping them out in terms of international expansion, late stage M&As, fundraising from top tier investors, scaling contracts with large corporations, and many things like that. So, if you would ask me, how is late stage different to earlier stages? Simply, I would say that, it's a completely different game. For example, one of the things that differs is the due diligence that you have to do for the startups, right? So for the later stages, obviously those companies are much more developed. So you can have a look at their financials, you can talk to their clients, you can, do due diligence on their previous investors. While at the earlier stages, it's only about, the vision, the product, if there is already a product, and the things which are more qualitative rather than quantitative in the nature.
Understood. So quite an interesting story, moving from a non-tech business through M&A through early stage VC through like a late stage VC that you founded yourself. Um, Let's focus firstly on the topic of emerging markets and startup hubs. So you touched upon the topic already, but essentially you spend quite a lot of time in Asia, and you are also traveling emerging markets, helping and doing some work to actually establish those ecosystems. So can you tell us a little bit more about that part of your job and of your life right now?
Sure, great question. So look, I mean, as I've mentioned to you before, myself coming from Russia, I do understand that there are many problems to do with the major markets, namely, sometimes it's a political pressure, sometimes it's economic problems, sometimes, it's lack of infrastructure or sophistication of entrepreneurs when it comes to international expansion. But still, there are many innovative ideas, talented founders, which, if given the right support and sometimes the right push, they can make it internationally. And if you look at, for example, Silicon Valley or London, over there, it's not as much, about where you're coming from, what your surname is, as it is about how well you can sell and how well you can fundraise. Right. So if at the earliest stages, the founders from emerging markets are given the right support by their investors or accelerators or business angels and corporate partners, then they can become household names and really as they say in the valley, make the world a better place. So as you mentioned, I've been traveling around Asia quite a lot over the past half a year. I would say I've been to so many destinations. I've been to Hong Kong, Singapore, Taiwan, Bangkok, Ho Chi Minh, Seoul, a few other capitals as well. And part of that reason was to look for the undervalued opportunities because it is my firm conviction that the main job of an investor is to find those undervalued opportunities, especially if you look at Western European markets, you would see that there is just so much free money floating around that investors are increasingly turning overseas to serve their opportunities. And another reason why I've been so curious about the emerging markets is because I am working with governments of several emerging markets to help them build up their local innovation ecosystem, such as, for example, in Pakistan. I'm a member of the task force for the development of AI and its integration into the various industries, like, for example, the financial technology industry, in governance, in uh, biotech, and in other fields. In South Africa, I am working on developing deep tech accelerators and programs between the UK and South Africa. In South Korea, I'm helping local founders and accelerators to source smart money and foreign expertise from abroad to inform their existing best practices. And it's good for business. It's also good because um, it is very interesting for me to learn much more about how different cultures think, what are their decision making patterns, what are their business practices. And I do believe that without such understanding, it's very difficult to succeed in this modern world, whether you are an entrepreneur, investor, or a corporate decision maker. So that's what I've been doing for quite a while.
You touched upon again a whole bunch of interesting topics and questions. I would maybe start, and that's my also personal interest. Of course, I spend a lot of time in Silicon Valley. I spend a lot of time in London as well. But I'm also coming from, let's say, startup-wise, an emerging market that is like Central Europe and Slovakia. Now, is the uh, what would you say is the way how to build a startup ecosystem? I'm asking, can you generalize, or is every country different and every country is lacking a key different key aspect of why they are not performing well? So, for example, Slovakia compared to Finland or Estonia are very similar countries coming from a similar background, with like similar amount of people, and at some point recently with a very similar economical situation. However, you can see that Finland and Estonia in Europe, they went a completely different route and then have produced quite a few unicorns, whereas Slovakia not at all. So what do you think are the key aspects of a good and healthy startup ecosystem?
Well, look, I mean, if you really want to dig into the micro levels, then sure, each country has its own advantages and disadvantages. I tend to think of that one more, on sort of the regional level, like for example, in Slovakia, it's Eastern Europe. And problem for Slovakian startups and their founders is that for the majority of Western investors, because they're unsophisticated, Slovakia, is still part of the Eastern Bloc, and from there they don't really mind, if it's Slovakia, if it's Estonia, or if it's Belarus, just because they think that the problems that they face are very, very similar. And to a certain extent, it's true, right? Like, for example, if you compare, for example, Finland to Slovakia, you would see that Finland has much better developed links with the bigger Western innovation capitals, like, for example, once again, London or New York or San Francisco. And as a result, even though the Finnish market by itself is relatively small, uh, the startups have an easier time from day one when it comes to pitching to international investors, when it comes to arranging uh, corporate contracts, or when it comes to, for example, trying to get into the top tier acceleration programs to give them a leg up when, trying to expand overseas. In Slovakia, I would say that, another key problem is that it is very difficult for a startup to grow from an idea stage all the way to a pre-IPO company, right? Because there is not enough capital at each stage. So from angel investors, from incubators, from seed stage funds, from growth stage funds to private equity firms to really support that journey. And as a result, usually, only the low digits do try and make it. And at the later stages, especially, once again, because the Slovakian market is relatively small, when they do make it, it's because of their international connections and it's because of the access to international customer bases. So it is very difficult for a Slovakian company to become a unicorn just by focusing on the local market, which is a different situation than if you, for example, compare it to such markets as, for example, India or China, right? They also have their own problems, but lack of a local customer base is not one of them.
So that makes a lot of sense. So you mentioned essentially two reasons. So one is that um, the markets in various countries all around the Europe are too small for them to exist only in those markets. Plus, I mean, but however, they lack the knowledge or connections to expand abroad. That's for sure something that we can see here. Another one is that there is not enough capital for later stages, probably. And again, like the founders might lack the capability to raise later rounds because, like what we see in Europe, or at least from Sudolabs' perspective, of course, most of our customers, like 9 out of 10, are in the US. Some of them are from the UK, but in terms of smaller European countries, um, there's quite an abundance of capital for early stage startups, but those investors mostly cannot find like actually experienced or skilled founders. And then as the company grows, they struggle to raise like comparatively good capital from like smart money and smart investors in those regions. So yeah, so that's kind of interesting. Now, how do you create those links, and how do you educate founders so that they know how to build companies in the Western world and expand to like the Western markets and US markets? Let's focus on the education first. Can you like do it on the state level, or do you need to have some role models or companies that succeed in those markets, and then they teach other founders, they teach their employees, and then they set up their own companies, such as for example, the PayPal example? What would you say? What's the key problem and how to solve the education?
Well, look, I mean, we live in the age of information, right? So I would say that right now is more than ever before a time where if you really know what to look out for, you can find it online, often case for free, because there is just, so many resources available. Problem is, there are many resources available, there is just so much noise as well, right? So you do need to understand what exactly you're looking for. And coming back to Slovakia or a bunch of other major markets, problem is the founders just don't know whom to turn to, whom to source their expertise from, right? And another problem, drawing on your example of PayPal and trying to get role models, is that uh, honestly, you would not get very far by looking at role models, because you have to understand that those guys who have made it before, they made it at a very different time, when the technological trends were different, where their own background and connections were not the ones that you as a founders have right now. And as a result, you can maybe uh, look at some patterns, but you would not be able to emulate the success completely. So you do have to take everything in their journey with a big, big pinch of salt. But at the same time, there are many, for example, acceleration programs which are catering to overseas founders trying to land in the UK market, or the American market. For example, when it comes to accelerators, I would say honestly, you would either try and get into Y Combinator, uh, and if you cannot do that, then go for an industry specific one, right? Because the majority of the others, like for example, Techstars or Plug and Play or Alchemist or a bunch of others, they are great to a certain extent, but at the same time, they're not really as able to give their founders sort of the star factor as much. And also, they're very, very generalist, right? So they're trying to cater to startups from the financial technology field as much as from the biotech field. And as a result, they're just not able to provide their founders with the right R&D resources or mentor support or corporate contracts to the same extent which a sector specific accelerator would have. Also, moving away from accelerators, I would say that there are many angel syndicates which are able to support founders at the early stages of their foundation, right? So some of them are even only online ones, right? Like, for example, you can, if you're an angel investor, join a syndicate and angel list on a bunch of other platforms, and then you share expertise, share due diligence, share your deal flow, and as a result, maybe get into the deals which you otherwise would not have gotten access to or would not have heard about in the first place. So for both investors and entrepreneurs, it's a good time to be alive, I would say. And right now, a lot of investors, for example, they're experimenting with AI to try and see how much of their own internal processes can be automated, right? So due diligence, deal flow generation, portfolio management, LP reporting, and many other sources. And I would say that, overall, having experimented with it myself, I would say that successes are a mixed bag for now, but we're definitely moving in the right direction, especially since, the technologies are evolving. More information is becoming available and it's becoming increasingly cheap. So um, I'm personally a big believer in startups who have a product which can be, with relatively small changes, be applied to multiple industries at once, right? Like, for example, if you have a solution for cybersecurity for the industrial field, it can be also applied, to drones. It can also be applied to financial technology uh, without, significant time and costs to be spent on subsequent R&D and product development. And as a result, you can not only diversify your income streams, but also, to a certain extent, de-risk the whole process, which is good for the investors as well.
Sure, sure. I mean, AI is certainly changing the whole landscape, whether it comes to investing or how we approach technology and how versatile the technology is these days. Um, how so when you essentially we were talking about the predispositions of a certain ecosystem to become successful, and you told me that role models are not enough because most of the time at the point of when you actually see a success, it's been quite a few years with different environment. Again, like environment without the AI technology, for example, completely different background of the people. So their experience is not they're not easy to emulate. But you mentioned that essentially how what maybe helps the ecosystems are the acceleration programs or angel syndicates. Now, how do you attract, and that ties well to the work that you are doing right now in those emerging markets? How do you attract like great acceleration programs to emerging markets? For example, let's talk about Eastern Europe because I like the topic. So, how would you, what would you do at this point in time to empower those ecosystems to produce more unicorns and better startups?
Well, if I had, a quick golden answer to that question, I would be a billionaire by now, I would say. Unfortunately, the classic answer, as any good consultant would say to you, is it depends, right? And for me, as an investor, I would say that, for example, when we look at the Eastern European market, uh, one thing is, as I've already mentioned, the earlier stage guys, the accelerators and angel syndicates. Another is the fact that the whole ecosystem is very, very volatile, right? So sometimes the policies are very difficult to predict. The policies which are, made by the government in order to support or sometimes to hinder the innovation programs of startups. And in some Eastern European countries, those policies favor the bigger guys, right, the corporations, because ultimately, they're the ones who are bringing in the most in terms of tax dollars. And as a result, it is the corporations who are ruling the game, and they're able to pick up their early startup competitors when the valuations are not as high, and then just integrate them into their internal operations. And if you are a person from the outside, you may think that, hey, it's a good opportunity for an entrepreneur to start up his business now, with an understanding that, if his product is relatively sophisticated, then in a couple of years' time, he would be able to sell for a few $1 million to a corporation. Problem is, people don't leave the corporate career to go back to it, right? They want to do something new. They want to innovate. They want to disrupt the existing ways things are being done, which are often case inefficient. So for entrepreneurs, it's not, as much about short-term gains as it is about, leaving their own mark in history. And a lot of them, they are more willing than you think to really stick at it over the long run, right? So for the investors, it's the same, right? You can maybe think that an early stage M&A at like Series A or Series B at 2 or 3x, the initial amount you've invested is a good deal. Unfortunately, it is not, because your LPs, your investors into the fund are often case demanding more uh, to compensate for the risk, especially, if it is an emerging market risk. And at the same time, you do have to understand that you, as an early stage investor, you would not be able to raise the next fund just by having a few exits which are 2x or 3x, because the likelihood is the majority of your investors will fail. So you don't need small gains. You need maybe 2 or 3 really stellar gains in order to compensate for the lagging performance for the rest of your portfolio. And this is why um, it is quite problematic in terms of the policy framework, the corporate outlook that really handicaps the performance of local startups and investors to make it a big success.
Sure, sure, sure. That is another consideration that, as you said, like every country has different policies and different, even if they even have some strategy on how to foster innovation, it's very unstable. And as you said, like even here we see on the in the ecosystem of Eastern Europe, like we are able to hire the best talent from the country simply because people are not very happy with their jobs because they work for like huge corporates here, and also the government is mostly supporting huge corporates, and then it becomes like a not very high quality development hub for some major bank somewhere in Germany. Whereas the interesting work for startups, for really innovative companies that are agile and that they follow the best practices and actually look what's happening in the world and what's new. There are quite a few, and only a few. That's why we also profit from this, let's say, instability right now in Sudolabs. But maybe one more follow up question in terms of building the ecosystems. So do really the countries most of the time, and that might be a very let's say an uneducated question, but you said that the biggest one of the biggest problems is that the founders from emerging markets have hard time understanding how to scale into larger markets and how to raise money in the Western world. Now, isn't it necessary for especially earlier stage companies, when they want to raise Western capital or when they want to expand on the Western market, to actually completely relocate and, for example, set up a company in Delaware to get US money? So how does then from those, if this is true, how do, for example, Eastern European companies profit from actually their founders building the companies abroad?
To a certain extent, it is slightly easier for startup founders from Eastern Europe or from Latin America or from Southeast Asia to raise capital from the West if they do relocate to the Western countries. But the whole issue is very nuanced, right? So you do need to understand, which exact market would you be wanting to locate in, because when you compare, for example, UK to the States, they have very different regulations in terms of, which industries are supported by uh, investors, institutions, and the government. They have, very different tax rates. They have different programs which you, as an entrepreneur, if you're sophisticated enough, you can take advantage of. And even in the US itself, you've mentioned Delaware. Delaware is not, the only legal jurisdiction that you can locate in. And even though for many entrepreneurs it is the most common one, it does, have its own disadvantages, right? So you do need to take all of those intricacies into account. Problem is, if you're not a serial entrepreneur, if you have not done it before, and especially, if you're coming to, for example, the US from a different market, you would not be able to know all of those things. And yes, potentially, you can source that understanding from external sources, but that would require a significant investment of time or money if you're, for example, dealing with legal firms who are, advising you on that or providing relocation support or whatever. And as a result, there is another issue. And I would say that, in general, sometimes if you are expanding too early, it could be just as big of a mistake as when you are expanding too late, right? So what is the problem when you are expanding too late as an entrepreneur? It's because, like, let's say you are firmly established in Slovakia or in Ghana, you know the local market, you have some revenue streams, you have, investments coming from local sources. For you, it's very, very risky, to drop it all and then, chase the unicorn status in the West. Uh, so a lot of entrepreneurs just don't want to take that risk. But when you are expanding too early, uh, you are unlikely to have sufficient revenue streams in order to afford, sourcing of the right talent, in order to afford relocation support, in order to, lease office space, build up your MVP there, understand the local market, and, a lot of the other issues that you have to consider. So there is sort of a golden time when the majority of the entrepreneurs who expand do seem to make it more successfully than before or than after, and sort of try and take advantage of the both ends of the stick. But so far, we've been discussing primarily Eastern Europe as an emerging market. Unfortunately, whether we like it or not, the whole investment world does not revolve around Eastern European markets. So I would say that there are more interesting markets to consider. Like, for example, for the Western investors, a lot of them over the past 4 or 5 years are increasingly looking towards Latin America, especially, the bigger countries like Brazil, or into some regions in Southeast Asia. In Southeast Asia, I would say it is mainly about Vietnam, Malaysia, Indonesia, than about the others, because they sort of have the golden mix between, relatively useful populations which are able to be upskilled for the digital age. They have, um, you know an understanding that there are some ways which, uh, if startup scale effectively, they can make it on the international markets as well as on the local ones. And there is also a bunch of money coming both from the Western investors and, for example, the Chinese ones. So there is an opportunity to sort of draw the best from the both worlds. But at the same time, when you look at some markets in Southeast Asia, you would see that, unlike the Western markets, they're not as much about, the very sophisticated technological products, like, for example, AI or robotics or space technologies, as they are much more about financial technologies or micromobility, or, better access to electricity or to clean water, so the impact investments and things like that. So they are relatively different in the nature in which, they grow, in which they approach their customer, in terms of the sales cycle, and also from the investor's viewpoint, in terms of the smart money that they need to provide in order for the company to be actually growing successfully over a medium period of time. And, on the final point, I guess, when we talk about the emerging market, there is also Africa. Unfortunately, Africa by itself, it's it's a market, but if you look at the venture capital side of it, there are only a few countries within Africa which are, relatively well performing right now. So I would say, the biggest ones would be, uh, I would say, Nigeria, Egypt, and South Africa. And overall, I would say that, in Africa by itself, there are maybe 7 unicorns coming from the whole region, and maybe 5 of them, so the vast majority, are coming from Nigeria, right? So it does suggest that, they're doing something right in terms of the government support, in terms of the uh, growing population, the ability to buy products and to scale them. And I think that, other countries within Africa can also learn quite a lot from their framework.
Sure, sure. Thanks again. A lot of insights and various topics. Maybe to start on the topic of emerging markets right now, in terms of and you already touched upon it at the very beginning of the podcast, but what are the main reasons the investors are looking at those markets, also Western investors? So you talked about the arbitrage, a possible arbitrage in valuation. Essentially, you invest early, and then if you succeed in pushing the company into the Western market or getting more Western money, you will already very quickly gain. What are the other reasons why investors go that way?
Well, another reason would be that there is just so much free money available in the West, coming from big institutions like, for example, pension funds, funds of funds, big corporations, especially at the later stages when, there's the investment that they make less risky. That, as a result, there is huge overvaluation in certain sectors. Like, for example, one of those sectors right now, as you can probably guess, is artificial intelligence. And as a result, it's much more difficult to generate attractive financial returns if you're an investor, which means that, a lot of the investors, they are going to uh, increasingly focus on earlier stages. So let's say, originally they had a growth stage fund focusing on Series B and beyond. Right now they're moving earlier stage. So they're focusing on, seed or Series A deals. Which can be advantageous because finance wise they risk less, And they're also able to build the relations with entrepreneurs. So once they grow to the traditional Series B sweet spot, then they already know from the inside how the company is performing, so whether or not they should follow on. And they have already built the relations with entrepreneurs, so it's much easier to win the allocation. That's one way in which investors are trying to uh, approach this overvaluation thing. Another way is obviously to focus on the emerging markets, right, where there is less competition, less infrastructure, more risks, but also a great opportunity for arbitrage, as I've already said, or to actually make a name for themselves, right? So if you are an emerging fund manager, a lot of emerging fund managers right now, they are focusing on niches like, for example, immigrant founders or female entrepreneurs, or other minorities, or the very very niche um, aspects of financial technology or e-commerce or biotech, and try and make a name for themselves in that particular niche. And if they're successful, after a few years, to raise a bigger fund, increase their geographical or sector focus, and take it from there.
Understood. So not only there is arbitrage, but also less competition in terms of investing, and maybe and as a result also an easier market to penetrate from the brand perspective and to like get those early gains that you need to do in order to raise follow up funds. Um, which of the so you've mentioned quite a few emerging markets. Which of the emerging markets, from like LATAM to Southeast Asia through Africa, which of those markets are the most popular ones right now? The ones that are growing the most and the ones that you believe in the most for the like next 5 to 10 years?
I would say Africa is a good bet, but Africa is not a good bet for the next 5 to 10 years. I think they would take much longer to, uh, develop a stable political situation, to build up the infrastructure, to uh, generate enough success cases in order to justify the risks for external investors. Uh, when we look at Latin America, as I've already mentioned, there are good markets like, for example, Brazil, but Latin America is mainly popular for the North American investors, right? So for the US based or Canadian ones, because it is similar in terms of the time difference, it is similar geographically, and as a result it is slightly easier to do the due diligence, or to potentially expand those companies from, let's say, Rio de Janeiro over to New York, right? But personally, coming from my own experience of dealing with many startups, of investing as an angel and as a late stage investor, and through working with governments of emerging markets, I'm a much bigger believer in the Southeast Asian market, right? So, what are the advantages which Southeast Asia has, which I feel the other emerging regions do not have as fully developed? Is, first of all, in Southeast Asia, you have a mix between the developed economies, like, for example, Singapore, Hong Kong, Taiwan, South Korea, Japan, as well as the emerging ones, right? Like, once again, Malaysia, Indonesia, Vietnam. And as a result, there are more opportunities for investors, no matter which stage or sector or business model they're catering to, in order to try and make their buck. And also, uh, even though, for example, Singapore, it's a relatively small consumer market, and the startups who go from there, they have to be international from day one. Legally wise, it is still a great jurisdiction with well-developed infrastructure, with great financial institutions, and especially since the time of COVID, Singapore is increasingly drawing a lot of capital and innovative talent from other Southeast Asia markets like Hong Kong, to become, the financial and technology capital of Southeast Asia. And this is why, even if you're a startup who is starting out of Malaysia, it is much easier for you to, approach your international expansion through the springboard of Singapore than if you're, for example, starting from Ghana and then trying to make it through London or something, right? So I would say that in Southeast Asia, there is a great mix between, young population, um, lack of barriers to entry, many gray legal zones which can be exploited by innovators, as well as opportunities for arbitrage, as well as rapidly growing income. And as a result, there are opportunities for entrepreneurs to build up their high tech products, build up their uh, you know less technologically savvy products, and become very very successful.
That makes a lot of sense. That's a great overview of all the different markets. Now, maybe just one last follow-up question, and then we can maybe just talk about your future plans and ambitions. If you are, so I understand that, of course, like if you are born and do not have the resources in Africa or Eastern Europe, you've been raised here and you are starting a company, probably you don't have that much opportunities to choose actually how you are starting and what you are doing with your life. But imagine that right now you are a digital nomad, or you are a free person, you can go wherever you want. Are there actually, and you want to start a startup, are there actually advantages in starting those startups in emerging markets rather than going to Silicon Valley to raise your first round and try to operate directly on the Western markets? Are there actually people moving to emerging markets to start their first companies, even though they have at the same time different options?
Well, in terms of digital nomads, I would say that, once again, at least from my own experiences, Southeast Asia, especially Thailand and Malaysia, have been sort of the biggest global hub of where entrepreneurs from abroad can, come in as digital nomads and uh, with much less hassle than in many other regions to start testing out their hypotheses, to build the MVPs. If those MVPs are not super technologically sophisticated, and to start selling the product to the local consumers, because the governments over there, they're very supportive, and they're trying to diversify the economies away from tourism, or in some cases, subsistence agriculture. And often case it means that they are pulling out several breaks in order to attract the talent. If we are moving back to the region where we started from, Eastern Europe, where we started our discussion, you would also see that yes, there are political and economic problems, but at the same time, the relative technological savvy of the entrepreneurs is relatively high, and they can hire many talented programmers, software engineers, R&D professionals relatively cheaply, which is a big advantage if you are building a technologically sophisticated and yet global product, because personnel costs would be your highest costs as an early stage company. And if you can uh, minimize them at the same time as still recruiting very very technologically skilled talent, then obviously it's a good idea. But right now, because of political turmoil brewing in some parts of Eastern Europe, I would say that, for example, a lot of entrepreneurs from Russia or Ukraine, they are trying to move away their R&D facilities or engineers uh, away to the developed markets, or even to the quieter spots like Georgia or Armenia or Turkey, just because then they would not be, accused of being overtly dependent on one side or another. At the same time, they would not be, as prone to the subsequent escalation of the risks.
Makes sense. And I think we can finish that we can finish the discussion where we actually started here in Eastern Europe. Maybe just is there anything you would like to say to the listeners? Maybe if you can share your future plans right now and something that maybe people can engage with you on.
Well, sure. I mean, look, I'm personally always quite happy to provide advice and support to entrepreneurs, even if they are an idea stage company and they're not really falling within our investment focus. So do feel free to drop me a line on LinkedIn. Mention this podcast so I know where you're from. And I would love to sort of help you avoid certain mistakes which a lot of the founders make when it comes to fundraising, business development, international expansion, or even if it's simply doing a deck. I would be happy to have a look over and give you advice. Other than that, I would say that once again, right now we live at a time when there is just so much information available. So do try and understand what exactly you as an entrepreneur are lacking at this current stage, whether it's a talented CTO, whether it's pitch practice or access to certain smart money or R&D capabilities, which would be potentially available had you applied to a good acceleration program. And do try and see what are the ways which you can sort of get that information of smart money, because without that, it's very difficult to compete. And personally, I would also love to recommend a book which I have read quite a while back. It's called Venture Deals, Be Smarter Than Your Lawyer and Your Venture Capitalist. And personally, I think it's a good book because it looks at an investment transaction from two sides of the table, from the side of an entrepreneur who is trying to fundraise, or from the side of an investor who is, thinking, is this the right opportunity for me? And it looks at the various aspects, like, for example, due diligence, negotiations, uh, portfolio synergy, potential exits, term sheet formulation and other aspects to see what kind of aspects are more beneficial to the entrepreneur, and on the other hand what kind of aspects would be more preferred by the investor, because we do have to understand that no matter how successful you as an investor or entrepreneur are, uh, any kind of business transaction is always a negotiation. So you do have to you know, uh, not take advantage of the other side as much as to develop a good working relationship, because you will be in it for the long run. So don't shoot yourself in the foot, and do try and build a deal which is mutually beneficial rather than one-sided.
I think that's some great advice. Hope I can for sure add the book to the description of the episode so people can reach it. And of course, if you have any other, we can sync up after the podcast, Alex. If you have any other ideas for great books, I'll add them as well. So thanks very much, Alex, for joining us today. And I'm sure that there was a lot of great advice for all the listeners. And we'll see each other soon.
It's been a pleasure.
And that's it for today's episode of the Startup Huddle. Thank you very much for listening, and make sure to catch all episodes on thestartuphuddle.com and follow me on LinkedIn and Twitter for more insights and updates on the world of startups. Thanks again for tuning in.